Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Wednesday, the 21st of May, 2025. I'm starting off because we're having a Memorial Day sale. Any of my courses or one-year research plan, 40% off. This goes until Memorial Day, then it's over. So we've had a few sales. I like to do that at different times of the year. You can get the full morning futures, $94, $95 for the Spider 1 year. The combo package, $172, $360 for the 1 year complete futures. So quite a good deal there. And I know a lot of you like the courses. So be it my Bollinger Band or my Outside Day course, $72. And with that, you get access to my morning research, my Spider research, and we'll even throw in for 2 weeks my written updates with it. And of course, if you take the charting course, the same thing goes, except you get then that for 1 month. So give it a try. I think you'll like it. You go to iraepstein.com under the word courses. It's right there for you. There's an icon up here, and there's another one right over here if you're watching me on YouTube. Okay, so let's talk about what's going on in the marketplace. And before I go to the chart action, why don't we see what we have coming up tomorrow? What you have tomorrow is the Chicago Federal Reserve National Activity Index. You got the weekly jobless claims coming out. S&P Global Group at 8:45. The May manufacturing sector PMI comes out. That'll be fairly important. U.S. existing home sales for April comes out at 9 o'clock. The natural gas report at 9:30. The Kansas City Fed manufacturing composite and business activity indices at 10 o'clock. Now, today was all about taxes, benefits. What are we doing? You'll notice we're not talking Ukraine. We're not talking Iran at this point. The market is now laser focused on getting out of the House of Representatives this bill. The market thinks too much spending is going on, and that's the negative that you're hitting right now. Please understand, once they get it out of the House, it goes to the Senate. The Senate will put its own spin, then it'll go back to the House. So you're at this point where, yes, you are correct. There's too much spending in America, and the market is punishing it. We saw today the 20-year auction, and it had to get bid up over 5% on 20-year bonds in order to get the thing sold. Okay, so what? You get it sold. We're still in great shape. What Trump is trying to do, and I can't explain this enough, the game that he has gotten you into, and if you voted for him and he did win the presidency, is that this is what he was going to do. He was going to, in his mind, make America great again by expanding growth in the country, let the growth overcome the expense part of it. If he's right, fine, but we won't know if he's right for 2 years down the road. So the market right now is heavy. I told you, and you'll recall this, that we're back up near highs. And did I think we were going to just right now go for those highs? I said no. And as it turns out, we're getting a bit of a correction. All righty. I'm going to go right into charts and not deal with everything else. You can see that anywhere else that you go. I'm having a chart issue. So if I go to the quotes, you're not going to get all the quotes, and I didn't want to do that. And actually, I had to cut back on some of the charts I'm showing tonight. The IT people are working on the reason for this. But if you look at Tesla, you can see a battle forming where the market is now shaping up, I think, a trading top. I am wrong in my thought if you get up and over that high. Do I think this company is going to have another big money moment? I absolutely do. I'm not certain that I agree with the concept for the car where you'll put it into a pool, but as I listened again to what Musk said, it doesn't sound as though the cars that he's thinking for that are your everyday cars. Use a car occasionally. It's like a bed and breakfast. Enjoy it, but let somebody else rent it from you. Okay, I still like Uber because of that. When we look at swing lines, we've got a higher high, lower low. So you've stepped out of this uptrend. That's what's been important. The market could easily pull back into all this, and the resistance is the upper Bollinger Band that you got to and you're pulling back. What else? When you reopen in the morning, the odds are, unless you're up sharply, that what's going to happen is you're going to lose that embedded reading. You close right near the day's lows. The weighting as to how this goes between the 3-day and 5-day periods of time that you use in the slow stochastic should kick all this back down, in my opinion. And the first objective will be wherever the 100-day average is. Google. I can't put up this name here. It's part of the issue that I'm having right now. All you did is you came up and rallied into the parts we were talking. Remember, Google got hit yesterday. You had an outside day down. Can't even do that. I'm sorry if I do that. I'm telling you, I'm having a big issue right now. I don't want to screw all the charts up. But you had an outside day down. You took out the high. The objective is the closest of the upper Bollinger Band or a key moving average. In this case, it happened to go to all three, but the sequence was first the Bollinger Band, the closest, then the 100, and then the 200 and the 100-day. Is the market trying to embed? Yes. I'm not going to try to go back on this. It's going to give me a problem. Everything gone bonkers on it, but only on the version that's using the stocks. The same software for the futures is working fine. It's what the IT people are working on. When we come to Netflix, still running that upper Bollinger Band and embedded. This gives you an idea how good this market is, because with everything around the market collapsing today, one of the biggest days that we've had in a long time in the stock, in the Dow down 800 points, the market was able to be up. You know, when you see a market up and everything else around it is down, gives you an idea how strong that market is. Robinhood had to succumb to this. This was a new high in Robinhood. This type of trade volume is what these companies base themselves on. They love to have this volatility. It creates trade. It creates profit for Robinhood. It's an embedded reading market. On breaks, I think this still gets bought. ExxonMobil, as you can see, came up and down. Now, Israel is, by CNN, reported to be preparing to attack Iran. I think it's a bigger game play of Trump fed up with Ayatollah Khomeini saying no to everything, and now they're getting ready. Will they pull the trigger? They don't have to. The message is being sent as to what will happen, but remember, then you let loose the Houthis and in Syria, whatever groups are left there. There's nothing left in Gaza to worry about. But that is what you're going to be dealing with. Is it worth it? I don't know. Does the president truly want to curtail Iran's nuclear power? Absolutely. Will Israel allow that to happen? For Iran to get a nuclear weapon, they will do everything they can to not happen, because the first target for Iran is what? Israel. So it's life and death situation. We hope that there's some sanity to all this and the attack doesn't have to take place. But it kicked up the oil at first, but then calmer heads came in. Also, please understand, any loss of oil from Iran made up like that by the remaining parts of OPEC. I say remaining, it's only be Iran that could have the trouble. I don't know if people will go after their oil fields or not. The nuclear sites, big problem for Iran there. In stocks, you now have lower highs, lower lows. You're about to lose the bullish embedded reading. You closed at 79.72. I think you lose it tomorrow. But the first objective is 203 and then 198. So I understand the pullback. Did I expect it? Yes. The funny part was, in my subscriber videos this morning, I said, if you're a super high risk trader and you've got to play the game from the long side, you think, well, I gave the numbers in the stock indices, but I told them, I said, I'm not making this my recommendation, because I've been out here every night telling you I think the markets are going to pull back. I drew lines on some of the charts and showed you QQQ and the other markets why I've been thinking that. In XLE, lower highs, lower lows coming down. Gold took off, and it should. This is an inflation story now for gold. Gold had the double whammy today of the Iran news out of CNN that maybe Israel's going to hit them. But inflation, for sure. I mean, no matter what President Trump gets done with Congress, in the end, it's all going to count that the economy grows to overcome the lack of the spending cuts. Even if there's a compromise in the House, how much big of a compromise can they get? The holdouts are going to be there tonight. They're not giving up. When we look at silver, back up and over the upper Bollinger Band, it joined finally today the platinum, which yesterday had its great day. Copper, back up and over everything. So we'll see what goes on. Be careful. Watch these markets carefully. Remember I said COPX, the copper miners, are stronger than copper itself, and it's been working that way. Then we get to the interest rate side of things. Come on. When you see that you're up now in the 5% area and the 30-year bonds and other markets with that, the 20-year auction didn't go well, you know that in order to sell things, what's going to have to happen? You've got to give a bigger yield. Japan, their interest rates are soaring for them. They're back up to, I think in the 20 or 40 years, they're about 3% plus. Well, you don't have to do currency conversions. So do they sit there and put new money into the U.S. part, or do they buy their own instruments at home? Probably buy their own instruments at home. They certainly are getting a yield that is higher than inflation without worries about currency. In the dollar, coming down. Not a surprise to me in any manner. Before the G7 formal meeting, I thought the dollar would go down, the FXE would go up, and that is the picture. Well, you don't have it here. I think this quote's not even right. I'm getting a funny quote on this all day, so please don't go by this. If the dollar was down, I promise you the FXE was up. I know that quote can't be right, and we'll leave it at that. I apologize for this. I do not know what went on with the charting software, but something that's out of my control. When I do the futures, they'll be perfect, and I'll be doing them shortly. You have yourself a good evening. Remember the Memorial Day